3, 2, 1. Right, last time we were here, we had just input a whole bunch of share codes down the side. These were our longs, and our shorts we put on the right hand side. But what we didn't know here was exactly how much. So here we had 10,000 Rand. I just arbitrarily chose a number, and you can see it adds up to 220,000. That's not enough. I want 1,000,000. And on the other side, I wanted equal. So, but it's a nice number. I just typed it in, or you can actually run that macro. Press Alt F8 and it'll actually do it for you. And I'm ready to press Alt A Y2. You'll see solver top right, and I get the dialog box, and the macro should have set it up all nicely. And it's going to go and change everything in highlighted by snake lights in green here. It's going to go and change those so that all the constraints are met. And at the same time, it's going to try and keep the variance to a minimum. Please work, please work, please work, press solve. You can see it goes very, very quickly. It's amazing. You must make sure that no other spreadsheets are running while you have solver. Otherwise, solver can sometimes just completely slow down, and it will very much frustrate you. But now we have an answer. We have our names and we have our rands. We have names and we have rands. So where you're going to go off to is to a sheet where you're going to work. And the one I've set up for you is this one called share prices. Share prices, and you have this sheet, and it's conveniently says students start here at the bottom, and there's actually a database here. You'll see piles and piles of shares. This is up to, I've only got it to 15th of May. Hopefully yours will be later than that. And all the way across, I've got 158 shares that you can use to Zeta on the other side. Do not mess with this sheet. And similarly, here are all the indices. Do not mess with this sheet either. We've got some special functions that are going to allow you to access those sheets. So you are going to make a new sheet. You might even start with this one right here. And what we need to do is to start investing our hedge fund on the 31st of December last year at midnight, and we're going to run it into the new year. So I've just got a few here. And what we really want to do is to put our two shares here. And this is just an example. I'm long Anglo and short Barlow World. And I can just paste those in, those codes. And you're going to paste by just going and copying Control C and going back to here and going Control Alt V, EV, and that will paste these codes sideways. And similarly, I want you to go and paste in, and you can see these are just typed in here, the actual Rand values. It's important to note that these Rand values must add up to 0, and it's important to note that the positive ones must add up to 1,000,000. But what we want to know is, how does this 1,000,000 get to, on the 2nd of January, how do we get to these new numbers? And how does this negative 1,000,000 get to these negative numbers? So what we do is we are going to take the 1,000,000 Rand, and we are going to divide it by the number of by the share price yesterday. That's this function here. This my share price is the function that you will use that accesses the sheet called share prices. And it's going to take whatever's in B5, which is AGL, and whatever in A6, which is going to be the date on the 31st of December. And what do you get if you divide rands by the share price? You get the number of shares. That'll tell you how many shares you had yesterday. And now you can go and multiply by the share price today. Okay, I'll come to this extra bit. This is adding the dividend, if there is any, a little bit later. Okay, but the cool thing is, once you've got that, you can then highlight all that, press Control D, and the formula's there. You can highlight this stuff and press Control R, and it'll copy it to the right. And that's that formula all the way through, pointing to the right dates on the left and pointing to the right share codes at the top. So I've done a lot of the work for you here. You see it says, it reminds me, see more stuff to the right. Well, if you go along to the right here, go all the way to here, you're going to find I've set out the template for you. You can get you started. There's your R1,000,000 investment in cash. So I've got the sheets all set up for myself, but I'm going to flip to it now. So I'm going to save this, crash out of here, and go Alt FR. I want to go and open up my one. This is one that you don't have. Mine's called Monitoring Hedge Fund Performance. But it's going to have a sheet. Look at that, just like the one that you've started to build. It's just thinking a little bit down here. There's a whole lot of calculation, 17%, 42%. But you'll see we start on the 31st of December and we're going to add dates. Add days going down, and across we've got our shares. First of all, the long ones, and secondly, we're going to have the short ones. So you are just going to paste this in. Okay, you're going to go back to the sheet here, highlight, Control C, come back to here and put your cursor there, go Control Alt V, EV, and that will paste values transposed sideways. Look, puts them all to the side. And how do we know whether these are longs or shorts? Well, look, they're shorts, they're negatives. So you're going to have to paste these in again, and you have to paste those in again. But you'll end up with a nice big, wow, look at this big fat array. I think I've got 44 shares. 2 times 22 going all the way along. Right, so those are just numbers. The formula comes in here. Now, you must use my share price. I'm not using the my part. I'm just using, this is for my database, just the share price function. So to get the value on the 2nd of January, I take the value on 31st of December, divide by the share price yesterday, and multiply by the share price today. Simple as that. So that's the A6, that's the A7. And remember to add a dividend. To add the dividend, hey, how do you add dividends? There's a very nice little, better go and open it again, Alt FR. Let me show you these dividends right now. In your sheet, that one that we were building here, at the there is a sheet here called Dividend Static. And so I'm going to show you here. Have a look. Here is Barlow World on the 8th of January, and there are 2 dividends. One's a special and the other is a final. So if you want to get the dividends totaled for a particular share code on a particular date, this is how you do it. You're going to refer to the sheet and you're going to use the sum ifs. And you're going to say, please add up the total dividend cents column. You can call it just that. That's this column here. It's labeled. And you're going to say the code column, that's that one in salmon there, must match whatever I've got in H6. Hey, H6 is Barlow World. And we continue. The ex-div date, which is the green one, must be matched by the H7, which is the 8th of January. When you press enter, this is smart enough to go and filter out all the Barlow Worlds here and the 8th of January, and to add up the 228 and the 297 to get 525. Okay, so simply, if you just don't lift that formula like that, lift it in, go back to your code here, okay, and you'll actually see it. I've actually done it for you. Okay, that's that same thing, and it's adding the dividend. Right, I'm closing that, going back to my sheet, and showing you that I've got the dividends. I'm dividing by the share price yesterday. That gives me the number of shares, and I'm multiplying by the share price today, and it might have dropped because there were dividends. So I'm adding back the dividends. Okay. Sure, there's so many formula, but the cool thing is you can copy this down. I think I should turn calculation off. Okay, Alt turn calculation on and off. You go Alt MX, and I'm going to press M for manual. And now you can highlight all of these guys and copy it all right with the Control R. And now we should be ready to. Hey, what if I add up all of these holdings on day 0? Make sure you get a 0. If you add up all the longs, If you add up just the longs, make sure you get exactly 1 million. And the same for the shorts. Obviously, the shorts must add up to negative 1 million. Right. Well, I'm not going to give too much away, but if you put your cursor here, press Alt equals. Yeah, it's you can see that adds up to 0. And if you copy this down a little, you can see that, wow, I'm losing money. Guys, this is not good. I'm fine, I'm making money. But that's the essence of the hedge fund. So to build up your cash, I've labeled this. This cell is labeled investment. Okay, and it's the cash, and it's going to get the JSE trustees interest rate. We haven't counted the JSE, and I'm just going to give you 1 day's interest. So I'm dividing by 250 because I'm only using trading days on the side here, not 365 days, and that gives it some interest. So you should get 230 Rand of interest from your million on the first day. But I am interested in plotting all of these out as units. And let me show you what I'm trying to do. Click over here. I want to plot a graph that looks like this. I want everything to start at 1, but I want to plot out how in green my longs are doing and how in blue my shorts are doing. I want to add them together, green plus blue, and add them together, and that will give me my total hedge fund. I think if you add your 46.9% and you subtract off their 34.1%, I think you get 12.8%. What's this brown, very straight line, very steady? It's the cash. It's earned 2.3% so far. If you add the cash in, then you'll get the total return. So now that we've got the whole cash thing, and I've labeled this whole cell, this whole row, cash. To unitize, it's very easy. You're just going to take what's ever in cash and divide by investment. This little @ sign tells it to go to the cash column and just return one thing, single value out of there. Copy that down. Look, it's the same thing, and you're basically getting the 2.3% return on your cash up until the 21st of May. Okay, now the interesting stuff, the longs. How are we going to get the longs? We're going to go and add up all our holdings, but make sure we only add up the ones where they are greater than 0. And if you add up the longs, hey, look, you get $1 million. And if you divide it by the million that you started with, it starts out nicely at 1 and goes from there. You can just copy this down. The shorts, slightly trickier. If you go and add up the shorts, you're going to get minus $1 million. And when you divide by the investment of $1 million, you're going to get a -1 number. And the way you turn -1 into a +1 is by adding 2 to it. So that's your formula. Add 2. And now we've got shorts. I've turned this around actually so that if the lines go up, it's good for us. So if longs go up, it's good for us. If shorts go up, it's good for us too. I also want to plot the total hedge fund units. I want to go long unit plus short unit, and that's this one. This is no ifs about it. Ifs and buts. We're adding everything up and dividing by the investment. And on day 0, that comes to 0, just like we wanted. Okay. So that's what we're going to plot. We're going to plot that out. In fact, if you want to plot that out, I'll show you how to do it. You put your cursor here, go Shift Control right arrow, Shift Control down arrow. Press your Shift F8 key, go to your date, press your Shift Control down key, hands above blanket, and you press the magic F11 key. Don't panic. We're going to go right click, we're going to press the Y, we're going to press Tab, down arrow, and enter, and we have got a chart. There's my cash, my long, my short, my hedge fund unit. That's how you do it. Got a whole chart. Right, so we've got the cash, we've got our units. This is brilliant. Oh, what about our total hedge fund? Our total hedge fund, remember, starts on day 0 with just the cash, and we want to add all our holdings. Oh, but this is reminding me, what's this gearing thing? Remember in the very first video, we spoke about how we can gear the hedge fund up. We have the same amount of cash, but we can go longer and longer, and we can go shorter and shorter at the same time, gearing up our hedge fund. So I've labeled the cell up here gearing. So I'm going to multiply my original cash from my longs by 4 or my shorts by 4 to get the gearing. So that's going to be my gearing. How are we doing? Looks pretty good. You can see this guy is geared crazily. Can make a lot of money and lose it pretty quickly. We want to unitize it. So we're going to divide again by the investment, and we've got a nice hedge fund unit that we can plot. Right, we're going to go and plot those, and you should plot those the same way as I showed you just now. But now I want to show you the things that we're scared of. Okay, are we scared of the all-share index? We don't like it when markets crash. We're worried about resources. We're worried about currencies, exchange rates. We're worried about the oil price. Okay, so in our indices sheet, you're going to use, notice I'm using something called share price. You're going to use, don't use share price, use my index price. Okay, and if you want to get these names coming up here, you're going to use my index name as well. So this goes, and my share price, you want to get the share price of the J203, which is the all share index code, on 31st of December, and you want to divide it. This looks so strange. This formula looks exactly the same, except there's an extra dollar here. And you can see I'm always dividing by the price at the end of the year in order to unitize it. Press enter, and the cool thing here is if you press your F4 key correctly and dollarized it right, you can Control Shift right arrow, Control R, Shift Control down, and Control D, and you've now got, hey, you can plot out all the things that you were scared of. So if you go there, and you go there, and you go Shift F8, go across to your date, and you press the F11 key, and you go Properties, Y, tab down to line, and hey, there are all the things that we were worried about. You can put better headings if you like, but one of these, the blue one is the all share index, the other one is the oil price, the other one is this is our currency, etc. But it's nice to plot it out, but I'm actually more interested to see, I want to measure risk. I want to see how correlated we are. So I'm going to calculate some returns. These here are the actual time series, but I need to go from day to day to get the returns. It's very easy. I'm going to make a table on the side here. This is the J203 returns, and to calculate continuously compounded returns, we take the natural log of today's value divided by yesterday's value, and that will give you continuously compounded return. If you've set it up nicely, you can just go Shift Control copy right, Control C, and here Shift Control down, Control D. So the one formula just gets copied into the right place all the way through. We're almost ready to do our scatter plots. So remember, these guys are going to be our independent, so they're going to be on the x-axis, and we're going to plot our hedge fund, the dependent, on the y-axis. So better get the hedge fund return right, and the hedge fund return is going to be simply the log of its returns. The log, if you go Alt-MP, I'll zoom us back to here, and make sure you do it on the total hedge fund, and it's going to be 0.92 divided by the 1. And you've got your return, well, it's almost an 8% on the day. Right, what are we going to do? We're going to highlight our x-axis and press Shift F8, so I can go across to my y's. Now I've got a column of x's, a column of y's, and I'm going to go to Durban, Alt N D. I'm going to press that on a scatter plot. Sometimes nothing happens, okay, but it's going to put my scatter plot right up in the top here. I'm going to right click to get it out of the way and move this chart, and I'm hoping that there's no relationship here. because this was my all share index. So what we can do is we can click, we can right click, we can add a trend line. Oh, I'm getting nervous already. Show the equation, show the R squared. You can click on here, Control B to make it big, Shift Control greater than will make it a nice big statistic for you, and you can be happy to say that your R squared is 0.7, that there's not much of a relationship. You can make the axes, the grid lines look better. It's always nice to put your labels low, get them out the way. Click on there, go labels low, get them out the way. You can also click on the number and get the percentage down to 0, percentage to, you can see I'm bored. Okay, it's nice to click on these things, Control B to make it bold, Shift Control greater than to make it bigger. Click, Control B, Shift Control greater than to make it bigger. And yeah, we can make these data points nifty. You can double click on them and you can set their marker to have a red border and a yellow fill like this, and you can maybe go to marker options and make them a bit bigger. If you want your line to be a bit more obvious, go and paint town red, make it a bit thicker and make the dash type, whatever. The important thing here is that our R squared is low. You might want to go and add some axis titles, because this guy down here is, we're going to say, is equal to, I'm typing equals up there, and that was the stock market, was it? So I'm looking for a heading. I want that to be the all share. Hey, look at that. Control B and make it a bit bigger, and this axis title is going to be our hedge fund. So I'm just going to type this in here. Hedge fund returns. It's like that. Escape, Control B, Shift Control greater than. There you are. I'm almost ready. I'm almost ready to go. So world, Control Z. We're ready to go. You can give it an appropriate title and say my hedge fund is not related to the market returns. Escape, Control B, Shift Control greater than, and you're in. Control S to save. And you should do this another 3 times so that you can show all of the things that you were worried about, you have got very little or no exposure to. When we were setting this up, that's called the ex ante. Before the time, that's what we planned for, to have no risk. But what we're doing now is the ex post calculations, where we're using the actual returns, of the things that we were scared of, the macro factors, and the actual hedge fund returns, and we're showing that there is very little. Right, we're nearly finished. There's one more thing. Remember that cover ratio, the thing where we got haircuts, where we had to take the number of, if you must add up your longs, you must add the cash to that. That will give us our assets, and we're going to divide by our liabilities, which are our shorts. We're going to plot a cover ratio. So the way that you do that is on the top here, this is going to be our cash. And remember to include the gearing and add up, these must be the longs. Gearing times longs, haircutted at 15%, plus the cash haircutted at 5, those are our assets, must be divided by, and again, our shorts are geared, so our gearing times minus the shorts, and they're shorts because they're less than 0. So a couple of brackets and things here, but Control Enter, and you've got a cover ratio that is greater than 1. That's good. So to plot this, you can highlight that column, press Shift F8, which allows you to go across without upsetting your highlights. Click on date, Shift Control down, press the magic F11 key, press the properties key, press Y, press tab, press line. And here you have the cover ratio. It's probably important to make your minimum axis exactly 1. Okay, because we want to see how close we're getting there. Anything below 1, and the prime broker is going to take over your portfolio for you. He's going to sell some of your longs. He's going to buy, with the proceeds, buy back some of your shorts until your cover ratio is above 1. So do you think you can do that? Build these graphs. Use the, remember I say share price, you must use my share price. And I'm going to show you some of my performance. I'm going to show you to my graph. This is me. And you must produce graphs that look like this too. So remember we plotted unit values. Wow, my shorts have gotten smaller in value and therefore are more valuable to me. They are 46.9% more valuable. Whereas my longs, oh my goodness, 34.1%. That's how much they've gone down. And you can see the evidence of the corona crash in March, down on the 23rd. But we don't have to worry because our longs and shorts, they add up. So even my losses of the longs will be offset by my gains in the shorts. And that's what's plotted here in red. And so actually we did beautifully right into the crash. We were up 14%. That's pretty good. And then we come out of the crash with a recovery, and we've actually, as the market recovered, we came down a bit. It's a low of like 4%, but look at this, we're back up at 12.8%. That's not annualized, 12.8% up until mid-May. That's 4.5 months. But you know what? This is the non-geared version. I should gear this up. So remember the 12.8, because I'm going to show you what happens when you gear, and everything got multiplied by 4. So, wow, if you take 12.8 and you multiply it by 4, you get something around about 54. So that's why that's 1.54. So you'll see, wow, this is geared. So it just makes it very wild. Up until the crash, we were 79% up for the year. At the bottom of the crash, we were 19% up for the year. So the gearing just enhances, it gears up, it magnifies things. The shape doesn't change, just the magnitudes. These are the things we're scared of. I want you to plot a chart of this. There's our hedge fund in red and yellow. Should we have been scared of Brent oil? One, I mean, this Brent oil lost 80% of its value. We should be scared of that. The rand dollar, you know, from it used to cost 1 rand to buy a dollar, then it ended up costing 1 rand 37 to buy a dollar in unitized terms. Okay, we lost 37%. So if you had stocks in there that were susceptible to rand dollar exchange rates, you're in trouble. Resources, they also tanked along with the all share in the crash. So this was this a great time to run a hedge fund? Very nice time. Not too many times we run this course over a significant market crash. The fear factors. We did well. But we need stats to prove this, and that's what we did just now. I put the all share returns on the x-axis, my hedge fund on the y-axis, and there is that 7%, the R squared. I don't care that there's a slope. You often get a slope. That's the 0.34. It doesn't matter. It's the scatter that you get around this black line. And the bigger the scatter around that black line, no matter what its slope, the lower the R squared is. And that R squared tells you that only 7.39% of my hedge fund's moves were explained by the all share index. My hedge fund did well, didn't it? So actually my longs got relatively bigger than my shorts. So I developed a little bit of market exposure, and that's why it's up at 7. Let's go to the next ones and see if they're as high. Resources, I must have developed some exposure there. Not 7, but 3%. But again, look, this is a shotgun. There's no exposure there. Ex post. Rand dollar, negative slopes here, etc. Don't worry. Look how widely on a day when the rand dollar didn't move, our hedge fund sometimes did -10, it sometimes did +7. There's no relationship there, and it's shown there in the 5% R squared. More things that we aren't related to, and oil is a great one. Even though we've moved on and haven't rebalanced our fund, we've got less than 2%, 1.83% exposure. And finally, the cover ratio, where we take the assets on the top, the shorts, liabilities on the bottom. We haircut the longs by 15%. We haircut the cash by 5%. And we were geared up so that this number was pretty close to 1 when we started, and it went down. Okay, we could have got into trouble. But as we did better and our longs, our assets got more valuable than our shorts, so this goes up. This shows that we were less and less risky. More risky, less risky. This indicates that we should be rebalancing our hedge fund and not just letting it run like we have. So I want you to go, the trick is, I want you to go and cut and paste your guys, and I want you to go and put them into the share prices sheet, the one that looks like this. We're going to use this as our, where it says students start here. You're going to actually use this. You're going to go and paste your codes along the top here. You're going to paste your values along here. Whatever this is, I think this is to calculate drawdowns. Do something with it, like move it or delete it or something. We don't need that there. You're going to put all your guys, your longs and shorts across the top and their rand values down here. And you're going to go and, I hate to say it, sorry, Mike, but students can actually just copy down and copy across. The formulas in there for them. They are going to have to do some more work because I haven't filled in this side of things. They're going to have to build this out. Okay, and they're going to have to do all the plots. And of course, they're going to have to have chosen a hedge fund that actually makes some money. And they're going to have to have done it by choosing some cool styles to combine long and cool styles to go short. Can't wait to see what the students come up with. Right, I think that is going to end our video series on how to design, manage, and run a hedge fund. Good luck, guys.